Welcome to the deep dive. Today, we're really diving into an exciting corner of finance, long-term investing, and specifically, we're zeroing in on growth stocks.
These are the companies expanding rapidly, They're not just growing, they're kind of reshaping whole industries.
Exactly. Offering a really unique path to, well, building lasting wealth. So our mission for this deep dive, it's pretty clear. We want to unpack the stories of three specific companies.
And these aren't just any companies. They're really leveraging AI,
Yeah.
artificial intelligence, and other advanced tech to fuel their growth.
Yeah, we're going to distill the most important bits, the key insights from our sources, give you a shortcut, really, to understanding what makes these businesses tick.
What makes them stand out and potentially, thrive for the long haul.
We'll look at one using AI in lending, quite revolutionary. Another building this massive financial services platform.
Yeah, it's sort of an all-in-one shop.
And a third that's just automating brokerage services like crazy.
To an incredible degree, yeah.
So get ready. We'll explore their unique approaches, the hurdles they've faced, definitely some challenges there.
Oh, yeah.
And the prospects, which look pretty compelling. Let's jump right in. Okay, first up, Upstart Holdings. Now, this is a lender using AI, artificial intelligence, to fundamentally change how loan decisions get made.
Right. Their main goal, basically, is to gauge credit risk way more accurately than, the traditional methods.
And make borrowing more inclusive, too, right? That's a big part of it.
Absolutely. They see real flaws in the standard FICO score system. How it can overlook people who are actually creditworthy just because their financial past doesn't fit this, narrow box. What's really kind of revolutionary is how Upstart's AI looks beyond just that score. It pulls in hundreds of data points, trying to get a much clearer, fuller picture of an applicant's actual risk.
That makes sense, but it's still fairly new.
Well, yeah, the model's shown a lot of promise, definitely. But they only went public in 2020. So it hasn't really faced, a massive stress test, a deep recession, that kind of thing.
But it has faced challenges.
Oh, absolutely.
Oh.
It hasn't been smooth sailing. The rising interest rates in 2022, 2023, that really put a damper on demand.
Right, from borrowers and?
And from their lending partners, which is critical for their model, they pulled back.
Ah.
So, yeah, that led directly to drops in loan volume, revenue, earnings.
Yeah.
Management had to react, cut costs, streamline things.
Sounds like a significant headwind. So what shifted? How did they manage to, turn things around after that rough patch?
Well, the environment has definitely improved for them. We've seen interest rates start to stabilize, which helps.
Okay.
But maybe even more importantly, the risk appetite, among investors and those lending partners, it's come back.
Ah, so the partners are buying the loans again.
Big time. Over the last couple of years, Upstart's locked in some really significant commitments. Billions, actually.
Billions, wow.
Yeah, like Fortress Investment Group. They agreed to purchase up to, I think, $1.2 billion in loans through 2026.
Okay.
And Blue Owl has an option for up to $2 billion. These aren't small figures. It's a real vote of confidence, in their model, their underwriting.
Even after the volatility.
Exactly. Shows confidence it can perform in different economic cycles.
And the AI itself, does it just stay the same, or is it learning, getting better?
That's absolutely key. It's constantly evolving. Management actually called out their Model 18, launched Q3 last year. They described it as one of those impactful accuracy improvements in our history.
Wow. Okay, so what does that mean practically?
Well, think about it. Their AI gets better at analyzing data, refining predictions.
Yeah.
It gets smarter at spotting those creditworthy folks missed by old systems.
Right.
So that means more approved borrowers for their partners, higher loan volumes for Upstart, better relationships with the lenders.
And better business overall.
Exactly. Better outcomes all around. It shows their core tech isn't just a gimmick, it's getting more robust, more reliable.
So for you listening, Upstart's story, it really underscores how AI can shake up established industries, not just by being more efficient, but by actually opening up new markets.
Fundamentally changing how we even define creditworthiness.
Yeah, potentially bringing in this huge group of people who were sort of invisible to the traditional financial system before.
And consider this stat. Their gross margin is 97.05%.
97%. That's incredible.
Almost pure profit from their core AI after direct costs. Shows amazing efficiency. And their market cap, around $7 billion. Speaks to that disruptive potential.
Okay, let's shift gears a bit. From AI lending, let's talk about SoFi Technologies. Their journey over the past decade, it's pretty amazing.
Yeah, quite the transformation. They started out mostly doing student loan refinancing,
Right, that's how most people knew them initially.
but they've really morphed into this huge, comprehensive financial services platform. I mean, everything. Banking, investing, insurance, different kinds of
The
loans.
whole package.
Pretty much. And one of the really fascinating parts of their strategy is this banking as a service thing they're doing.
Okay, tell me more about that. That sounds different.
It is. It's not just about their own consumer products. It's a strategic move to let other fintech companies build and run their own digital financial products.
Without needing a bank charter themselves.
Exactly, which is a massive hurdle, super complex, incredibly expensive. SoFi's ambition is basically to be the AWS of finance.
Amazon Web Services, but for finance. So providing the back end.
Precisely. They've invested heavily in their tech stack, bought companies like Galileo and Technisys
Oh,
to
yeah.
provide that essential plumbing, the infrastructure. A cloud-native digital and core banking platform. It's about powering the future of fintech, not just being one player.
That's a really interesting strategic angle, positioning themselves as the foundation. What kind of scale are we talking about here? Does that tech platform have much reach?
Oh, absolutely. Just in the first quarter, SoFi's technology platform served over 158 million accounts.
158 million.
Yeah, and processed over $8 billion in annualized transactions. That gives you a sense of the sheer volume and reach they get by powering this whole ecosystem, not just their own stuff.
That's massive. And didn't they also get a bank charter themselves? How has that impacted their deposit growth?
Yes, they did.
Yeah.
And it's been critical, especially with interest rates going up. Their deposit base just exploded.
Yeah.
Went from about $7.3 billion in 2022
Okay.
to over $27 billion in Q1 2025.
Wow, that's huge growth. Why is that so important?
Well, having those deposits means they can use that money, which is relatively low-cost money, for them to fund their own loans.
Ah, instead of borrowing elsewhere.
Exactly. Compared to other financing methods like warehouse lines or securitization, using deposits is significantly cheaper and more stable.
Got it.
This shift, they estimate it's reduced their funding costs by something like $515 million a year.
$500 million. That's a massive competitive edge.
It really is. Allows them to offer better rates, maybe, or just keep healthier margins on their loans.
So thinking about this for you, our listener. SoFi's strategy, it's all about diversification, building this complete financial ecosystem.
And that ability to use those growing cheap deposits, that's a key reason they've had sustained positive quarters.
Right. Fueling demand for their loans, especially personal loans.
Yeah. They've got a market cap around $23 billion now and a pretty solid gross margin of 57.60%. Shows that integrated model is working.
Okay, so from that broad platform approach, let's pivot again. Let's look at interactive brokers, a different kind of fintech innovation here.
Right. This is an electronic broker, and their platform is really built for tech-savvy investors, often very active traders.
And they offer a huge range of products, don't they?
Oh, yeah. The platform is incredibly robust. Stocks, options, futures, currencies, bonds, mutual funds, ETFs, even event contracts, and crypto. Pretty much anything an active trader might want.
So what's their main differentiator? How do they stand out?
Automation. Extreme automation. That's their core thing. They leverage it to be one of the absolute lowest cost brokers in the industry.
And low cost attracts a certain kind of client.
Exactly. It's not just about saving pennies. It's fundamental.
Yep.
By offering such competitive pricing, they pull in that sophisticated, active investor segment, people who really care about low costs and efficient trade execution. It builds loyalty with that valuable group.
It sounds like technology isn't just part of their business. It's like the foundation.
It's totally ingrained in their DNA. You can see it right at the top. They're senior management, mostly software engineers.
Really? That's unusual for finance.
Very unusual.
Ah.
And all their automation tech, it's proprietary, built in-house by their own programmers.
So they control everything.
Pretty much. That deep internal expertise is what lets them deliver that super high-speed trade execution at those rock-bottom commission rates. It's really an engineering-first culture. Efficiency's just baked in.
And the bottom line, what does all this automation and efficiency do for their financials?
Well, the direct result is just industry-leading margins. Seriously. Because they're so automated and efficient, Interactive Brokers posts profit margins that blow away most traditional finance firms.
And even other fintechs.
And even a lot of other fintechs, yeah.
Yeah.
In 2024, their adjusted pre-tax profit margin was an incredible 72%.
72%. That's astronomical for that industry.
It really is. It's a direct outcome of that tech prowess and that relentless focus on automation.
Hmm.
They just do more with less, basically, turning those cost savings straight into profit.
So for you listening and thinking about tech's impact, interactive brokers is a powerful example. Automation, efficiency. It's not just about saving money.
No, it's about building this incredibly strong competitive advantage, a real moat.
Yeah. By being so efficient and low cost, they capture that really valuable slice of the market, the active, sophisticated traders, offering something competitors just can't easily match without totally rebuilding their own operations. Okay, so let's quickly recap this deep dive. We looked at Upstart, using AI to really change the game in lending.
Mm-hmm. Then SoFi, building that massive all-in-one financial ecosystem, kind of like the infrastructure provider for future fintech.
Right, the picks and shovels idea. And finally, interactive brokers, taking automation and brokerage to an extreme, leading to amazing margins and a strong competitive edge.
Yeah, each one shows a really distinct, powerful way that technology, especially AI and automation, is driving growth and reshaping these traditional financial sectors.
We really hope this deep dive has given you a clearer, maybe more distilled picture of what's driving these companies.
Yeah, the goal is always to give you insights that go beyond just the headlines, cutting through some of the noise.
And as we finish up, maybe something to think about. You see how deeply these companies have woven technology and automation into their very core? What other industries out there seem really ripe for that kind of technological disruption, maybe even a radical shakeup?
That's a great question. Where else could this happen?
And what could that next big thing even look like when AI really takes center stage in a completely different sector, maybe one we're not even thinking about right now, something to mull over?